Aloha Internet. Bubbles stock market close show for the week ending with Friday, October 24th, 2025, 4:03 p.m. Eastern Standard Time. The stock market just closed. I have all the markets pulled up here. 9 months from left to right, 1 week per candle. We have a little bit of movement still going on in the futures market as I guess it's settling down. But we see in all of the major stock market indices here, three of four, all four of them ended the week with a pretty strong bullish candle. Three of the four hit all-time highs just today. Let's look at that. Just today. So I switched to a daily chart. This is the one that I'm usually looking at throughout the week. All-time highs for three out of four. So let's switch over back to the weekly chart, get a bigger picture view of what's going on in the old stock market and general markets. VIX down, oil really had an up week, but look at this. We just came here to this 9 EMA, nine period exponential moving average. Bitcoin overall ended the week up. However, we see that the candle of, excuse me, the body of the candle is definitely in the lower 50% ish of the price action, and we see where that price action is in relationship to that previous candle. But overall, yeah, okay. So overall, Bitcoin though on a 9 month period is up. Same thing with silver and gold up. Look at these moving averages here. It's showing a lot of strength. Even though this week was down, it hasn't really changed a bullish trend yet. I don't necessarily think it's going to either. But gold on the candles looking even stronger and cleaner. The dollar had an up week. I mean, we could really just end it right there. That's that is pretty much everything. So let's drop down and look at some individual stocks. Okie dokie. So you can pretty much guess the S&P 500 via. We already looked at the. We technically we looked at the S&P 500. We looked at the Nasdaq. We looked at the Dow, and we looked at the Russell in the futures. We looked at the futures versions of those. So it's not as really needed to really take a deep look at SPY because it basically is a reflection of S&P 500, which the E-mini represents, the backslash ES. So we know it was an up day over here. And for VIX overall, like the VIX future, down, we're around that 1639. I think it's going to easily go back down to 15 or maybe a little lower. Service now, you see, I end up shorting an put option here at the 917 and 50 cents. So I completed my strangle, and service now obviously it went down. It went down enough, so it was a down day, and that's what I needed. I needed some downward movement. This day wasn't doing it for me. This day wasn't enough. It wasn't enough of a down day, even though it was down. It really wasn't enough. And even though this was Friday, Thursday, Wednesday, I was really thinking I would get filled on Wednesday, but it just the premium just wasn't good. And I was a little bit lower away, so I compromised by moving closer to the money, the 917. But I think I got pretty well compensated for that with this drop down today. CrowdStrike started the day really green, hit an all time high, but you see it has a bit of a topping pattern there, and it is a red candle. IBIT and BTCI, both down days, both kind of getting around that 9 day moving average. And also both of them seem to, like for example, here is around the $60 area, and over here around the 55. But I get it, they're two different numbers, but if we take out the numbers and we just look at the patterns and the direction and things like that, it's really, really similar. So maybe you could say this 55 and the 60, they're only $5 away. So let's take a look at Bitcoin actually to see if where might this 55 and $60 on IBIT and BTCI be in correlation with. So it's probably I'm kind of just guessing here, or maybe it's not so much of a guess, but we're trying to figure it out. So here we had Bitcoin futures coming down. This is the lowest it got, and it's in this area pivoting. So we're working with somewhere, let's just say the 105 to about somewhere right in here, this range of a pivot. And then that seems to be around the same time that we're getting this area in here around the $60 mark and around the 55. Yeah, I'm gonna keep I'm gonna keep working on that. I'm gonna keep figuring that out because I want to be selling. I want to sell options on IBIT more. BTCI I just want to accumulate at the moment. I don't mind selling some options on it. I'm still short cash secured put options on it. It's just the option chain isn't nearly as well put together as IBIT, and I think it has some pretty good premium over here. And so looking at if I'm monitoring the Bitcoin futures that's trading, Bitcoin trades 24/7, but at the moment, the easiest way I have to monitor Bitcoin price action is with the Bitcoin futures. And then, so from there, the Bitcoin futures margin though on Schwab, last time I checked, is huge. And overall, I'm doing a lot more stock and stock options trading. So I'm kind of moving away from futures at the moment, although I do want to bring them back into my life to actually be trading versus just drooling over. And so these ETFs seem like pretty good proxies, I think, for Bitcoin. And to let me rephrase that, seem like pretty good proxies for me to uh, extract some money uh, to myself. So I guess it's not really extract; it's instract some money to myself um, through Bitcoin being invented. All right, so that is my laser eyes. And Coca-Cola pulled back, not too far though. Looks like it might be building a support around 70-ish. MO doing a bit of a sideways thing. I think I'm going to get a little more aggressive on building a position in MO. FCX, which unfortunately is here twice, but FCX, we'll just do it one time. Kind of looks like it's doing some sideways action there. And SMCI had a short put expire worthless today on that, and it pulled back. I was looking, my short put was at 39, and it just like a $10, around $10 difference there. So I looked at rolling it up, see if I could bring in some more credit, but it just really wasn't really much credit there when I looked, or at all today. I'm not sure, but when I looked and I thought about it and I saw like where the premium was, and then it would be changing my buying power, and or could potentially be changing my buying power, I was like, I don't think it's worth it. And then Oak Low having a bit of a comeback. It looks like it's might be. Let's see if it's gonna kind of what's it gonna do around these two moving averages. It today it looked like this area here put some resistance on the price action. How much we will see. ASTS in a way has a similar definitely has a similar look as Okla. That's why I like these stocks though. Have very similar patterns. Tesla doing the sideways thing with we see the candle from this big bullish candle here. Look at this. The very next day, boom, 50%. Price is back down here under these moving averages. Same thing, like in a way, over here, it just took this one. It took one extra day to get up there, and this took, I guess, one extra day to get back over back down here. Palantir. A lot of times, I'm noticing a similarity in some of the look of Palantir and Tesla in these little boxes here on the 3 month with 1 day candle with a 3 month from left to right. Sometimes I'm noticing that, and it doesn't surprise me if they sort of look similar, but it's definitely not exactly. I think there's other ones that like this one and what was it? Okla, that one's showing a better similarity. And Robinhood too kind of has that look. Actually, all of those stocks, SMCI, Oklo, ASTS, Tesla, Palantir, Robinhood, oftentimes I will notice very similar patterns on when I'm looking at a 1 day, 1 hour chart. And I think overall when I'm looking at the daily chart too, at least from yeah. Anyways, so that's how that ended. I don't think there's a major reason to go through the sector ETFs because we already know like overall the stock market's been up. Different ETFs, although I think it might be interesting to I might I'm at least going to look at short short strangles on XLP again, see if there's anything exciting with that. But at the moment, let's just drop down here to looking at individual stocks. Walmart. Okay, Walmart, you see over we're at 1 year left to right, 1 day per candle. So Walmart overall has been up or got this getting some resistance or support right in there. And then MO, we've been watching that one pretty well, but this is our 1 year chart. See these seems like if you get under 64, that's a pretty decent price to be buying at. Even probably around here would be a decent price to be buying at if you're looking to hold on to this and pass it on to your heirs and just extract those dividends every quarter, which will be raised, which we could assume since those dividends have been increasing once a year for the last at least 50 years or over 50 years, we have a fair degree of optimism that we'll have a couple more years of dividend increases. Speaking of over 50 years of dividend increases as well, Coca-Cola. Coca-Cola looks much more range bound than MO though. That's kind of what it looks like to me. And it seems like we're not at the quite top of the range, but we're not really at the middle. We're kind of in between the middle and the top. ExxonMobil also looking range bound, also a pretty good dividend increaser every year. I don't think it has hit 50 years, but it has, I think, hit at least 25 years of dividend increases. In fact, around COVID, they borrowed money when they were just losing money on oil. They borrowed money to pay their dividends. So that shows a pretty strong commitment to making that dividend payment. Because the other hand would have been, hey, it's just one. It was COVID. It was a once in a lifetime event. Blah blah blah. Just we're just missing it. We're going to bring it back as soon as COVID was gone. We're good. Da, da, da. They didn't do that, but that could have been done, right? I know there's a lot of places I called, and it was like, like, well, due to COVID, the wait time is much longer than blah 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 blah. It's like certain businesses they they had to do what they had to do, right? And sometimes that happened. But they didn't do this with their dividend, and that would have been easy. It would have been easier to say, hey, we can't pay the dividend. I think it would have been at least. Anyways, I'm going off on a tangent there. Sideways, right? But I really like that stuff. Johnson and Johnson. Overall, we see it's been up. It kind of went down, back up. Kind of went sideways until it really ripped up past here, up here. Another good. I think that one also falls in over 50 years of dividend increases. Uh, Colgate Palmolive, same thing. I think over 50 years of dividend increases, and we got probably over 1 year of downward stock movement here. It's trending down. How low is it going to go? I don't know, but there is a price. Let's see. Let's actually pull up the fantastic FinViz. Let's put it in here. Take a look. The Thinkorswim has some fundamental stuff, but I like this one because I really want to find this number really quickly. Looking for is 10 or lower. We're pretty close to 10. Are we profitable? Colgate Palmolive, are we profitable? We are profitable. And PE, a little bit under 25. PEG ratio, would like something better on the PEG. Got our dividends here. Yeah, it's what would be obviously one of the issues that we're running into is this downtown Colgate Brown. Yep, downtown. It's just like moving down, right? So what's a good price to buy it at? Yeah, that's a good question. What is a good price to buy it at? I don't know. And I'm actually I'm going to work on answering that question for myself. And because if it keeps going lower at some point, I should start buying some. At some point, it's going to become a good deal. How good of a deal do I want, and or what point does it become a good deal? Is it a good deal right now? Those are things to consider. Dow, which you see from left to right, has been even more downtown than Colgate. It is just down. However, look at this. Boom, gapped up. Do I have earnings on here? Let's check. Click that over here. Show corporate actions. Let's put those on here. Bam. All right. Okay. It sure enough was. It was earnings. Earnings. They got it bumped up on earnings. That's really good. I think this stock deserves it because in the past they seem to be a pretty good dividend stock. Let's pull them up. Let's pull them up. Let's put them in our fantastic, our favorite, the Bubble Stock Market Show favorite, FinViz, DOW. All right. Woo, I'm noticing a problem. I'm noticing some problems. Well, here's one problem I just noticed. They're not profitable. That is a problem. That's a bit of a problem. Another problem. Where's the PE ratio? Another problem. Where's the PEG? Well, look at this though. Under 10 enterprise value to EBITDA. But we got a problem. There's a problem there. Texas, there's a problem there. All right. So bumped up a little bit. What? I'm gonna take my Eagles out. I have some Eagles over here, and I'm gonna take these Eagles out and put my Eagle eyes out on Dow. I'm watching that via my Eagles. Rio, it's okay. It went kind of almost looking like a smiley face. Like maybe if we could see more over here to the left, it might be a bit of a smiley face. And this one, theta options. These are stocks that I have in the past and will in the future sell put options on. Now these ones, I kind of like to sell these a little longer in time. A little longer in time. And speaking of time, from 1 year from left to right over here on Hormel Foods, look at this kind of sideways downish, and then boom, the gap. You heard of the Permian gap? This is the Hormel gap. Boom, it fell down like that. But let's see if that had to do something with earnings. Sure enough, look at that earnings. Boom, gap down there. This one over 50 years, raising that dividend. But we got a gap. I know it's a gap. Whew, gapping down. How low is it going to go? At what point is a good price? Let's pull up our handy FinViz to the rescue. I'm going to put HRL, Hormel. All righty. Okay, are we profitable? Oh, we're profitable. That's good. That is good. What's a gross profit? Operating margin. Okay, these are kind of these. They're low, but they're there. They're not negative. They're positive at the moment. PE below 25. That's good. PEG. We're really running high in the PEG. Oh man. Ooh, enterprise value EBITDA. Not too bad. Not too bad. Not too bad. Could be better, but definitely could be worse. So Hormel. Yeah. So ADM. Look at this. Kind of went down, bottoming out. We see like this reverse head and shoulder. Here's the head, here's the shoulder, here's another shoulder. And it was kind of like sort of, if this wasn't there, it would be this like round bottom type of thing here. Round bottom. But instead of a round bottom, it's got this tailbone sticking out quite a bit. It's like, whoa, what was going on? You got the big tailbone there, boy. And so, anyways, we're going up. We've been going up, and this one also over 50 years of raising the dividends. So you know what we got to do? Okay, you know what? You're right. We don't gotta. We don't actually have to look at Nootropics Depot's supplements right now. We don't have to do that, and we don't have to look up ADM on FinViz, but I allow myself to. I allow myself to see if they're profitable. Oh, they are. They are. They're less profitable than Hormel Foods. How come their stock is doing so much better? Oh, okay. Well, that's not much profitability there. Should pay it out of their dividend right here. Oh, about 50%. Okay. PE a little over 25. PEG. Ooh, the PEG's running pretty high. Enterprise value to EBITDA 16. Yeah. At what price? I don't know. But what price is good? I don't know. I gotta read more of the Intelligent Investor and start being able to figure out what's the value of these stocks. Procter and Gamble. Okay, another one. Over 50 years of raising the dividend and over 1 year of going down from left to right. Down. Boom. Look at this. It gapped up here and whoop, brought it back down here. You know the drill. You know the drill. You know what I'm gonna do. I'm gonna put it right here. PG. Keeping a PG in here. This is a family show. Children friendly. I have nieces, nephews. I have young cousins. There's multiple people around in the family that need good financial education too. That's why I send them over to the Cashflow Academy. All right. So, but if they're listening, I gotta keep it PG. Parental guidance. Is that what it is? I don't know. PG. Oh, okay. So PE. Speaking of PG, that's PG. What's the PE of PG? And it is a little less than 25. Enterprise value to EBITDA. Mm-mm-mm. It's not too much over 10, but it is. PEG, ooh, close to 5. Are we profitable? Ooh, look at this. Yeah, that's quite a bit better. Like that's quite a bit better since technically you're probably in business to make money, so that's pretty cool if you're making money. You know what though? Sometimes, or maybe often, I think I got J&J on there twice. All right, went through them all. Sometimes, or maybe often, the flipping premium for short puts on these stocks is not necessarily that exciting. And it does make sense because the less volatile or kind of the more stable, like if you work at a car insurance company or you own a car insurance company or you just think about a car insurance company right now, the the drivers that are the most volatile pay the most premium. So we'll take a look at those later. I'm realizing now I got to get something done. So with that, you guys have a fantastic day.